Tom Hayes, Chairman of Great Hill Capital. We have a pretty sanguine outlook on the U.S. economy in the short term. What we've seen of late was positioning in late October, mid to late October, got very extreme. Managers were overweight cash. They were taking the lowest risk in their portfolios than they've taken since the pandemic lows in March of 2020, and before that, the great financial crisis lows in March of 2009. And they were really offsides. They were overweight cash. Hedge funds were the most short the 10-year Treasury than they've been since late 2018, which was the bottom right before a Treasury rally or a compression in yields. So it all was kind of the perfect stew to see the reversal that we saw last week. And we do think that that's going to persist moving forward. We're going to see some strength in the equity markets through year end. The consensus has just been simply too negative going into earnings. Expectations were for negative 4% earnings growth, or contraction rather, and instead here we are after 80% of companies reporting up plus 3.7% earnings growth year on year. So a lot of positive things happening. Well, I think we're in a good spot. We saw inflation is under control month on month. Average hourly earnings came in at plus 0.2% versus plus 3.3% expectations. The non-farm payrolls came in lower than expected at 99,000. So what that does is it basically is a Goldilocks scenario where you're getting enough softening to get the Fed out of the way. And it actually, if you look at the odds of another Fed hike, they've collapsed down to 9.8% for the December meeting. So with the Fed out of the way, even if they keep rates elevated, we're positive. If you look at forward earnings expectations for 2024, earnings are going to grow 12%. And if you look at multiples, yes, in aggregate, the S&P 500 is trading at 18 times, but if you back out those Magnificent Seven stocks, you're below 15 times, which is very reasonable. And I think that's going to be the theme for the next 12 to 24 months, is the broadening out of the market. The 93% that have underperformed are going to start to outperform. That doesn't mean Magnificent Seven will necessarily do poorly, but I think there's going to be a lot more opportunity, a lot more broader opportunity that's going to be an underpinning for the markets and economy in the coming year. So we have three major turnaround companies for you to support both of our themes. The first theme being the broadening of the stock market and also the topping out of yields. So now that we have an environment where yields are more normalized and actually stopping to go up, the biggest problem with valuations is when you do a discounted cash flow model, DCF model, if your discount rate keeps going up, the valuations keep coming down. So now that we seem to have peaked out and people can get comfort that rates are going to be stabilized, the companies that were perceived to have refinancing risk or debt risk, solvency risk that have really been hammered are now going to get a recovery because analysts can model out what's going to be the interest expense moving forward, how can they deleverage, what are the value of the future cash flows moving forward. And in that context, we love two U.S. turnarounds and one international turnaround. The U.S. turnarounds, the first one you're going to fall off your chair is VF Corp. Okay, this owns North Face, it owns Vans, they also own Eastpak, JanSport, etc. We have a turnaround situation with this company, a brand new CEO. Bracken Darrell has come in. He previously did a turnaround with Logitech. He came into Logitech after their stock had been down 82%, and from 2013 to 2021, the stock went from basically $5 to $133. He had a 26 bagger. And he thinks that he can turn around VF Corp in the same way. He started off last week with a kitchen sink quarter, writing off everything like a good CEO so he can set expectations low and beat every time coming forward. But he couldn't write off everything because they beat on the top line and they came within shooting distance on the bottom line. And I think that Bracken Darrell is going to have his second monster multi-bagger turnaround, and we want to participate over the next 2 to 3 plus years. The second domestic turnaround is Advance Auto Parts. And again, they too brought in a brand new CEO who has turnaround expertise, who has supply chain expertise, and his name's Shane O'Kelly. He ran HD Supply for Home Depot. That was a $7 billion top line business for Home Depot, growing like a weed. It serviced the larger contractors and did all the supply for them. Harvard MBA, US military background, ran multiple businesses, supply chain businesses, distribution businesses, Advantage, etc. And the big problem was the previous CEO jacked up prices. They historically had a reputation of having the best service, best parts, best turnaround time, and they ruined it by raising prices and retrading some of the contracts. The new CEO is going to come in, fix those contracts, repair those relationships, still generating free cash flow, trading at 10 times earnings. So we like those two turnarounds. And now with rates normalizing, that refinancing risk gets mitigated. They'll be able to sell what they need to sell to deleverage. And I think that the cash flows can resume on both counts. And then finally, on the weaker dollar, the dollar stop strengthening thesis and international companies getting flows, a company we love, and we've been building a position for over a year now. It's been going sideways because the dollar's been strong. We think it's ready to absolutely take off, is Alibaba. And what's amazing about this company is if you overlay it with the emerging markets chart, the correlation is very high. And you'll see the last time we had a monster rally in emerging markets was from 2003 to 2007. Emerging markets were up 400%. We think we are setting up for a similar environment for emerging markets to fly. And because Alibaba is one of the highest quality, largest weight companies in the indices, they're going to get the most flows. And then once they get flows and they start to go up, people will actually start to pay attention to the fundamentals, which have been truly phenomenal in the most difficult once-in-a-100-year environment, both from a policy standpoint in China, a geopolitical standpoint in China, etc. They've been able to grow free cash flow. They generated $25 billion of free cash flow last year in spite of the shutdown, in spite of the crackdown, in spite of the regulations. And you can buy this company for 2014 prices when they IPO'd. You can buy it for the same price today. The difference is the revenues are up 800% from that point. And now they're going to release and unlock that value by breaking it up into 6 different parts. You're going to get an IPO of Ant Financial, which is one of the largest financial services firms in the entire world. You own 33% of that as an owner of Alibaba. Freshippo could be the next Costco of China. They opened 1 store a day on average in September. They are crushing their competition now. They're cutting prices. They're gaining share. And here's a fact that no one could possibly imagine. AliExpress, their international e-commerce website, just overtook Amazon as the largest e-commerce site in Europe. So AliExpress is now bigger than the Amazon e-commerce business in Europe, which is huge. And then AliCloud, which is the growth driver for the future, will be spun into a separate company. You'll have it as an owner of Alibaba. They've got 80% share of the tech market in China. They have 38% share of the overall market. This business is setting up just like AWS was in the US in 2016 before they went on their parabolic move, as you had digitization adoption, and now with the large language models, AI, etc., the compute power demand is unlimited. All of them are 12 to 36 months. These are long-term. We're looking for multi-bagger turnaround plays, and we take a long view. We want to be owners of the business. We focus on underlying fundamentals over time. In the short term, the market's a voting machine based on emotion. In the long term, it's a weighing machine based on fundamentals, and that's where we're focused on all 3. 12 to 36 month time horizon for the turnarounds. To get double pluses on all of these, and in some cases much more in our view.